Good morning, everybody. It's Chris here from Serene Education with the 4 majors notice update for the 25th of May 2012. Hi guys, end of week. Just going to go over the 4 majors, starting with Euro against US dollar. I have a 4-screen long-term template up here with the weekly on the top left and daily top right, 4-hour and my hourly entry candle here. Just wanted to bring to you your attention the weekly to see how much movement we've seen just recently after the break of that 1300. On the euro, a lot of support through here, through Feb, March, April, and then straight through May. Bang! Massive downside move. Look at these lower swings here going into this session, or into this lower swings depicting downside movement, all the moving averages above price, and most importantly, guys, our CTC strategy was very much clearly indicating we should have been looking for any other sentiment, bullish sentiment, other than the bearish downside. So beautiful strategy, lagging. You might have wondered, look at this massive pullback here. However, the overall sentiment is still negative. Yes, pullbacks will occur in a negative trend as likely as they do in an upside trend. In this case, exactly the same. And another point of view is how much momentum we've seen this prior week and what it's done and where it's taken price. Notice this area here at 1226.50. As I mentioned, a very strong price support and resistance here. In early January we had a bit of a hesitation, and then back in August, September of 2010 we had hesitation. We're now we've clearly breached that. Today the close lower. If it closes the same at the momentum on this side over here, we are definitely looking into new territory, and you can see that there's not much over here to really stop price from really moving lower, and then maybe down here somewhere roughly around the 2350. Other than that, it's clean air down to this June low that we saw here in 210. This is after this massive move down through 2009 right through to mid 2010. So things are not looking all that good for Euro at the moment, and the more negativity and the more procrastinating the Greeks do, the more likelihood of them actually leaving. There's a lot of speculation out there that a lot of the Eurozone countries are putting in contingency plans for Greece's exit. So a lot of this is now being playing out on price action as we see it. So that's the weekly. On the daily, not a lot of trading last night on the Asian session. Very indecisive, very small trading range. A lot of momentum going into this break over here. You can quite clearly see at 1265 we had a slight psychological bounce. Didn't move that hard. About 23 back to the 23.6 fib retracement area, if I'm not mistaken. Yes, and then massive bearish engulfing, and then 2 prior days ago straight through it, and now we're trading below it. So what we could see is a slight consolidation. If you still keep, as long as price stays below this 1265, then we could see ultimately long term still favoring downside momentum. We could see a clear indication of a breakout like we saw here on the at 1300 is a bounce, breakout, slight pullback, and then the exhaustion to the downside. Here again, breakout of a major support and resistance level like we had at 1300. Then we're going to have the slight pullback or consolidation, and then the execution to the downside again. Onto cable, good old sterling. And here again on the weekly, I just want to bring up to you to see how much momentum we've seen over the past couple of months. The negativity that's played out over the past couple of months, as you can see quite clearly unfolding on a weekly chart. A lot of momentum to the upside through most of this year for sterling, heading higher. Better figures than the European counterparts. However, recently, not really stacking up. All those news that came through that production figures were down, construction was really in full tilt, and then a typical slowdown, and the words that all cross everybody's minds that we are now back into a double-dip recession. And sure enough, this momentum is now piled in with the problems we're having in Europe, especially with Greece. All tied in. Sterling will have they are all likely to be affected because of the close ties with the Eurozone. So what's happening now is you can see the CTC is still very much blue across here. Yes, we've had a massive fall. We are back below all the moving averages, including the institution. We had a nice break above that. We thought, well, 1600 we could see a bounce, and then we could see a bounce on this upside trend, and then we could be heading up towards the 1265.50. That never materialized as as the overall sentiment on the markets, the genuine sentiment out there just second guessed it. This was just primarily risk averse trading. It was just a knee-jerk reaction, but overall the overall sentiment out there is still negative, and sure enough it caught up with price, and we're now back below the 1600, and in doing so we've been breaking some prior support and resistance levels. Noticeably one here, there's a genuine hesitation area around the 1585, 1500, and now as we go into the end of this week, we're trading into another price support and resistance level right now, which is now at the 1565.50 mark. So break below that, you can quite clearly see there's a lot of momentum to the downside. We can see price going all the way down to here to 1525.50, which is way down here in the lows that we saw in January of this year. So I'm going to go to a daily chart now. You can quite clearly see that we've had a lot of momentum to the downside. If you take the January lows here, as I mentioned, to the high we saw recently in May, you can see that we are attempting for the second day. You can see a lot of support through here at the 61.8 Fib retracement area here at this 1565.50. Break below that, there's lots of free air. We could trace the 78.6 Fib retracement area. That's a Fib extension. You can see that, as I mentioned, is now 1545, around another consolidation area. A lot of hesitation at this area through November, December, and parts of January of this year. So you've got almost a 200 pip move between this range over here, and then you've got another 50, 100, 200 pip range down to the bottom here at 1525. So there's lots of pips to be made to the downside. As long as this momentum stays short, you can see all the moving average above price, and most importantly our CTC is telling us we should be looking for nothing more than shorting opportunities. So a clear break, you can see hesitation going into the support. We get a break and close below the 61.8 today. That means for Monday or Sunday evening open, we could be genuinely looking for further sentiment to the downside with new lows, fresh lows, breaking through this year's lows. In fact, well, the better part of February and March lows, to head towards the January low here at 1525 overall long term. On to Swiss franc, good old Swissy. Here again, I'm just showing you the weekly charts. I use the weekly charts to give me an indication where I could look for potential targets. And I must say they help a hell of a lot, because now, as I mentioned, we should be looking at these targets at 960 here as a potential target long term on the weekly. And sure enough, boom! In the week, we hit straight into it. And most importantly, you start seeing that our CTC on our weekly starts to go now. We've got a blue arrow, blue candle, and for the first time, our weekly candle is showing to show blue across the board. Fantastic. Get above 960, then we should be looking at least towards the institutional moving average, which will take us up to prior support and resistance levels here at the 1000 or the 100 mark, which is brilliant for this pair as we head higher. Swing hard, depicting upside trade, and you can see through a long period of time here we traded sideways, consolidativeness around the 90 mark, and we had a breakout. Had a breakout either way. Break lower, a lot of CTC was still red across the board, or break higher, and sure enough we had a break higher recently 3 weeks ago, and then we've now headed up towards that 960, and sure enough as we go head towards our daily chart, you can see that 960 momentum, beautiful move to the upside. So low to this pullback high here, and you can see that the 50% now at 960 has been reached. Massive movement as we head into this 960, a very strong support and resistance level. Notice a slowdown in the candle size, big momentum, and as we head into this target area, the candles get smaller and smaller and smaller as profit is taken as we get closer to this potential target, long-term target, guys. That's the beauty of this. Okay, so now you're looking for a trade, you'd have to wait for the break and close above the 960. No point getting it now if there's a likelihood for a pullback now as we head into this. People might, because we're going into a weekend, we might find that people might take a bit of a more chunk out of their profits, and you could see price reverting to the downside again. Then we start looking at how much it could pull back to. So if this is clearly our 960, this is our resistance level at 960, then we should start looking at 23.6 potentially. Not saying it will happen, but potentially if there is going to be a pullback, we've seen it happen before here, we could look at 23.6, 38.2, the 50 and 61.8 as our Feb retracement areas in this pullback. If we do see a break today, and a close going into Sunday's open, that means we should see this momentum really rise to the occasion come the new week. All the moving averages are below price. CTC's in our favor. Very important about the strategy. We have our blue arrow, blue candle, and the CTC on the other side is very much positive. Okay, so everything's looking positive. Just be aware that we are trading now into a major support and resistance level of 960. Rather, if you're not in this trade, rather look for a nice break, juicy break, followed by a little consolidation to tell us momentum still upside favorite, and then pull the trigger for longs to the next target. Okay. Last pair of the day for this week is the US dollar Japanese yen. Here again, I'm just going to bring up the weekly charts. Let's have a look. Massive pullback. Lots of momentum to the upside. Half of it's gone now already. This past couple of months, we've seen a massive, we saw a dramatic move to the upside after some movement sideways. We've consolidated for a long period of time. You can see through August, right through to February of this year, price has just been moving sideways. It's been doing it in sessions. You can see before that, we saw another massive sideways consolidation. Very block trading wise. Not a hell of a lot of momentum, not really much going anywhere, and pretty much not very profitable. Yes, intraday you could have, but sheesh, massive moves. I mean, and you got to worry about all this type of stuff. Intervention. It's just crazy. The further the US dollar has fallen, and I'll just zoom out so you can see the actual severity of this fall. You can see a lot of intervention as we headed back down to the 75. A lot of intervention from the Japanese government to try and stem this negativity on the US market. And we saw a nice break recently. When I say recently, in Feb, a lot of positive figures out of the employment figures out of the States, and we saw this massive move to the upside, and in doing so, breaking some major areas of support and resistance here at 78 in particular, and then heading up towards the 81, which happened to be another support and resistance area. Over here you can see quite 80 with a nice bullish up candle, then finding support on 1 week, and then heading higher towards the 84, which happened to be another support and resistance level at this block formation here. You can see how these blocks all work. A lot of consolidations. You can see these targets really popping out on a weekly chart. So I suggest you guys look at a weekly chart at the end of the week just to clearly give you an indication of price action for that week. When you start seeing candles like this with little wick on it, they're very decisive candles, guys. Little wick in any candle and more trading volume is going to tell you that we should be seeing further upside movement. That's really going to get the market really moving in one day. When you start seeing a decision on a weekly chart, you don't get a lot of movement. Okay, so this is what it was clearly looking for. A nice bullish breakout either side. Break out the box, break out the box. And we've got that, and then you can see the momentum really following through. Yes, first target 80 was reached. Then the second target would have been this 8400 here, and sure enough, over the past through Feb, we went straight into that 8400, then we just hit anchors. Bearish engulfing, then price reverted to the downside. We're looking for a pullback at least 50%. Well, the shallower the pullback, the more sentiment positive in this case the actual move was. The bigger the pullback, the less sentiment there was overall in this breakout, and the more sentiment looks favorable for further turn in the downside. And sure enough, as weeks have been playing out, you can see that 23.6, etc. These pullbacks were tested. If I do that, you can see 23.6, the 38.2 was targeted, the 50, and now 50 would take us back to the 80, which happened to be price support and resistance. We would have expected to see a bounce there. Prior support becoming a new, prior resistance, breakout resistance, support becomes a new support, and then we see the upside move. That failed to materialize because we went straight through it again, hesitated, then we had this bearish candle here on the underside, failing. So we're taking, however, the past week has been positive. We've seen price actually moving higher, back up towards the 80. But as the sentiment shows you, the CTC very much over here, disregarding this upside move, the CTC was still red. We only had two parts of our strategy telling us on our long term that this was a genuine positive sentiment. It cancelled out, and now we got red and red arrow, red candles, and the CTC on the other side is very much red. So now we should be looking for that sentiment break below 61.8, and then we'll genuinely see this break or fall back towards 78.6. If I can just plot that in there so you guys can see it. 78.6. There we go. Back up towards 75, 50, 78, and then down towards the 7600 mark, where we could see the Japanese government throwing more austerity measures at this to try and keep the US dollar boat afloat. It's sinking at the moment, and it's not looking really, really good. So the longer trades under 80, the more likelihood we're going to see price reverting to the downside or remaining bearish for the foreseeable future. So if it can get above 80 quite soon, then we should see that momentum start making its way up towards that 8400 again. But as long as it remains below this 80 or this prior support or resistance, it'll become a new resistance, apologies, and we should see the overall sentiment long term still favoring the downside for this pair. So onto a daily, you can quite clearly see that negativity, the CTC, very much over the past couple of weeks really turning red, and that 8400 way up here, you quite clearly see that now the momentum is generally favoring the downside. Swing lows depicts downside movement and that 80 mark. There we go, that round figure. We're spending more time below 80, and the longer we spend below 80 means that the overall sentiment is still very much negative in this case. Okay, we have seen some upside movement here, and we're going to have potentially see a return to the 80 again. However, this downside trend line, apologies, I'm getting the wrong. The downside trend line here is very much still above price. Notice we still have the 20 period moving average acting as a nice ceiling level, and further ceiling level for this pair, and so is the 50. So it's trading below those two small time moving averages. The institution moving average, however, is still below price, and as long as below price, it still means that long term sentiment is still generally looking positive on our daily. Overall, however, the intraday is still looking not all that great because we're seeing a massive pullback. So you can see here, if I do the fib retracement, this was the low here we saw in February to the previous high recently. You can see price has pulled back since that. 23.6, the 38.2, 50%, guys, here at the 80, very strong support and resistance level. Notice we're spending more time below 80, below the 50, and in doing so we tackled the 61.8 and we saw it bounce back up towards. Is this the breakout, the pullback, and now we're going to see a continuation low side. As long as it maintains below 80, then we could see that actually play out for the foreseeable future. One to watch. Okay guys, that's it for today, or for this week. I hope you have a fantastic trading day. Just be aware we might see some consolidation along the pairs as we head into the weekend. There is still some seriousness about the Greek problem is going to be on everybody's talking minds. It was last night on the Asian session. It will follow through until further notice. They want to see the Greeks, the new government in Greece, saying, listen, yes, we are still going to adhere to the rules or regarding the bailout funding that they've received by the IMF recently and stuff. If they don't, then there's more likelihood for them to falter, and you could see a Greece exit, which a lot of countries out there, or countries that make up the Eurozone, apparently have been told to start putting plans into place for the likelihood of Greece actually bailing out soon, or jumping ship, put it that way. So things are not looking good, and as long as that remains out there, that sentiment is going to be playing out on everybody's mind psychologically on the trading floor, and that will depict itself in the trading candles that we see plotted on our charts. If we can read those charts correctly and apply these templates to it, the more likelihood is we're going to be taking those trades in the direction of what the sentiment is telling us, and we are going to be long term more profitable. Fantastic for us, as long as you do your analysis. Okay guys, I'm going to end off now. I'm talking too much, going on to 20 minutes. Have a fantastic weekend with family and friends, and I'll see you bright and early on Monday morning. Have a great weekend, and most importantly, trade serenely.